In today's video, we delve into a pressing issue affecting many households across the nation: the soaring costs of insurance and how they're increasingly pricing families out of their homes. As insurance premiums rise to unprecedented levels, middle-class families find themselves caught in a financial squeeze. We'll explore the various factors contributing to this trend, including the impact of climate change, and compare the situation faced by urban versus rural communities. Additionally, we'll discuss potential solutions, the psychological toll on families, and the urgent need for government intervention to address this crisis. Join us as we uncover the realities behind rising insurance costs and their implications for American families. 1. The escalation of insurance premiums. Over the past decade, insurance premiums have been on a steady climb. This rise is attributed to various factors, including natural disasters, increased property values, and inflation. When a flood or hurricane strikes, insurance companies face massive payouts. To cover these costs, they raise premiums. It's a simple equation, but one with far-reaching consequences. Families who are already stretching every dollar find themselves squeezed even tighter. For some, the increase is manageable, but for others, it's the tipping point that pushes them out of their homes. 2. Impact on middle-class families. Middle-class families are often hit the hardest by rising insurance costs. They typically have mortgages and rely on stable monthly budgets. An unexpected hike in insurance premiums can throw these budgets into disarray. Imagine a family of 4 who has carefully planned their finances only to find their insurance premium has doubled overnight. Suddenly, they must choose between paying for essentials like groceries or their insurance. It's a dilemma no family should have to face, yet it's becoming all too common. 3. The role of climate change. Climate change is playing a significant role in the rising cost of insurance. As weather patterns become more unpredictable, the frequency and severity of natural disasters increase. Insurance companies, in turn, adjust their rates to account for this heightened risk. It's a vicious cycle where the environment impacts insurance costs, and families bear the brunt. For instance, regions prone to wildfires or hurricanes are seeing some of the highest premium increases, leaving residents in a precarious position. 4. Urban versus rural. A cost comparison. The impact of rising insurance costs isn't uniform across the board. Urban areas, with their higher property values, naturally see steeper increases. However, rural areas aren't immune. In fact, rural homeowners often face unique challenges, such as limited access to competitive insurance providers. This lack of competition can lead to higher premiums, putting additional strain on families who may already be dealing with lower incomes compared to their urban counterparts. 5. Potential solutions and mitigation strategies. While the situation may seem dire, there are potential solutions on the horizon. Governments and communities can play a role in creating more affordable insurance options. For instance, subsidies for insurance in high-risk areas or incentives for building resilient homes can help. Additionally, families can take proactive steps, such as investing in home improvements that lower risk, like storm shutters or fire-resistant materials. These measures can sometimes lead to discounts on insurance premiums, providing some much-needed relief. 6. The psychological toll on families. The financial strain caused by rising insurance costs is just one part of the equation. The psychological impact on families can be profound. The constant worry about making ends meet can lead to stress, anxiety, and even depression. The fear of losing one's home is a heavy burden to bear, and it's one that affects every aspect of family life. Children may sense their parents' stress, affecting their well-being and academic performance. It's a ripple effect that underscores the urgent need for solutions. 7. Government intervention. A necessary step? Many argue that government intervention is necessary to address this growing crisis. Proposals include regulating insurance rates, providing direct subsidies to homeowners, or even establishing a national insurance pool to spread risk more evenly. These measures could offer immediate relief to families struggling with high premiums. However, they also come with challenges and controversies, such as funding and the potential for increased taxes. Nonetheless, the conversation around government involvement is gaining momentum as the problem continues to escalate. In summary, the rising cost of insurance is a complex issue with no easy answers. It is affecting families across the country, forcing some to make the heartbreaking decision to leave their homes. By understanding the factors at play and exploring potential solutions, we can work towards a future where the dream of homeownership remains attainable for all.